Only price pays. At the end of the day, if price is not going up, you're not making money on your stock. And if you're not making money on your stock, you're either losing money or it's dead money going sideways. My name is Christopher Yule. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where we save time, make money, and start winning with less risk together as a team. Now let's get into the lesson of the day. All right, so stick around to see how we rank this out of 10. Yesterday, we ranked this channel's video at 2, which was painful. So let's see how this one goes.
What's going on, guys?
This video is called SOFI is about to enter the S&P 500 and launch over $75.
Guys, it's Kyle. Welcome to the Stock Goat YouTube channel. In today's video,
I did notice that this channel seems to only talk about SOFI, right? Listen, Kyle, there's lots of other stocks out there. There's so many other stocks out there. You probably could check out a couple others, just saying.
we are going to be covering the SOFI stock. We have a ton of great news for you guys today. We're going to be covering a new bullish price target that just came out, guys, a big upgrade from where the analyst was previously at. We're going to cover some technical analysis, where the stock could possibly be headed in the short term, right around earnings. Guys, remember, SOFI earnings are...
Okay. I would love to hear his technical analysis because this guy on this channel has been insufferably bullish, I guess is the way to put it. Very curious to see what his technical analysis has, if it's anything other than just doubling in the next, 30 seconds.
Are going to be the 27th. We will be live streaming those earnings for you early on in the pre-market. It's going to be a very exciting video. Guys, we're also going to be covering some news that's been going out on Twitter and stuff like that. People have been talking about how Q4 is going to be an extremely soft quarter, and that is just not the case. We are actually going to look at some numbers and show you exactly what happened last year from Q3 to Q4. And when you actually see what goes on, rather than just listening to people, chirp on the internet, you're going to see that
What? Listen to people chirp on the internet. Like I say, this channel, I'm new to this channel, watching this channel and seeing how it's like the only stock he ever talks about. It may be the only stock he ever talks about. And he may have everything he owns in this stock, but that doesn't mean that it's the greatest investment of all time, right? It doesn't mean that. I'm sorry, Kyle. There's lots of other great stocks out there. And to put all your eggs in one basket is, in my opinion, a very risky thing to do, right? Now, you've heard of the term diversification, Kyle. I know you know what diversification is. When you are so levered into a stock that you can't see the forest for the trees, and you can only see when movements are going up, right? And completely disacknowledge the fact, if that's even a word, that prices can go down. You've lost risk control, right? By losing risk control, you can watch everything disappear, right? So Kyle, from me to you, my friend, there are other stocks out there, okay?
SOFI is setting up for an extremely bullish Q4, especially with the marketing direction that this company's been doing the past couple of months. You can just feel that these guys are trying to steal market share each and every single day. And I'm telling you right now, guys, we are going to be seeing records all across the board: revenue, members, profitability. You guys already see my projections, revenue projections, 720 to 760 million. And also profitability, I'm projecting 7 cents EPS. Analysts are looking for about 4 cents EPS right now. And once again, guys, the SOFI management has a $45 max comp.
This just smells of GameStop, doesn't it? Smells of AMC, smells of those people who are looking for the MOAS, the mother of all short squeezes. Listen, it could go up. I agree with you. It absolutely could. But it could also go down, Kyle. Okay? Just putting that out there.
Compensation bonus package that needs to be hit by mid-2026. But what you need to realize is these guys aren't trying to hit it by mid-2026. The stock literally clear $45 at the middle of 2026. That is way too risky. These guys are going to try and clear $45 way before the midterm of 2026. SOFI is going to have the foot on the gas.
So they're going to have to triple in price in 18 months. I'm not saying it can't happen. But if you zoom out on the chart, I'm not saying it can't happen, but we're talking going from $15 to $45 way up here, right? So basically, you're going to have to do something like this. In order to hit that target, you're going to have to go like almost vertical. I will say, looking at the chart, keep in mind there is what's called an order block out here that was created. Let me zoom over real quick. This order block was created in November of 2021. Okay, so this is overhead resistance that it's looking, it's basically headed right up into. Order blocks are basically big orders, big institutional orders that are waiting to be filled, right? And if it's above the price, you can expect that to push the price back down. If it's below the price and it comes down and bounces off of it, you could expect it to go back up. This, in my opinion, is the easiest, simplest way to see support and resistance where it's not just made up, right? When I say made up, I am a data-driven person, right? And unless you have data to support that this is support or resistance, I can't get behind that. But in this case, these order blocks are sitting right there where it's like, just be careful, put that out there.
For 2025 guidance, I do not think they are going to play it conservative like they did last year, which we saw that cool off in Q1 and Q2. I think they're going to come out swinging for Q1 and Q2, and that's why I'm extremely bullish. And yes, guys, you've seen me throw around that $75 price target now, and the only way we get to that $75 level is if two things officially happen. And number one is SoFi Galileo Tech Platform actually lands and signs a deal with a top 10 legacy bank institution. That's the number one thing that needs to happen. And then the number two thing that needs to happen is SoFi needs to get announced to the S&P 500. And guys, you need to realize once they get announced to be entered into the S&P 500, it takes about 2 more months to enter into the S&P 500 for whales and institutions to start buying your stock. So the S&P 500 is actually two separate catalysts, an announcement you're getting in and then actually getting in. So those three things need to happen for SoFi to clear the $75 level. And most likely, that would happen of 2026 with the outstanding shares that the stock has right now. That's about 80 billion market cap. But once again, we do not know if SoFi is going to increase their profitability that they're going for right now, 55 to 80 cents. So we got a lot of things to cover inside of this video. Once again,
so in the chat, let me know below, like what's the appeal of SoFi? Why are so many people excited about SoFi? I'm not seeing it, right? But then again, I'm super ignorant, right? I'll tell you that right on the top. I'm super ignorant. Tell me in the chat why people are so excited about SoFi. What is it other than just another meme stock that's got people so excited about it?
if you find any of this information useful, be sure to smash the like button, drop a comment. Don't forget to subscribe to the channel. We're going to be keeping you updated daily on all of the bullish news with the SoFi stock. Let's get into it. All right, guys, take a look at this SoFi stock today. We literally have only about 15 minutes into the close, and we're up about 3.5% today. And you can see the SoFi.
Yeah, yesterday was a super bullish day. Let's see. So I don't really look at intraday charts, but let's remove this. Yeah, you can see that it's pulled up. Now, I'm going to give you some real technical analysis here before I hear what Kyle says. I have 3 moving averages on my chart, and 3 moving averages is really all you need: a short, an intermediate, and a long term. The blue line is the 10-period exponential moving average, EMA. That is your short term, right? If it's below the 10 EMA, the trend is down. If it's above the 10 EMA, the short term trend is up. Now, the 20-period EMA is the black line, and that's your intermediate term. Same thing. Now, the 50-period EMA, that's the red line right there. So the way that I have quantified trends, and it's super, super simple, right? Just write this down, put it on your charts, keep it forever, is the 10-period EMA being over the 20-period EMA with price being over the 50-period EMA. What does that look like? It's really, really, really simple, right? Those 3 stacked on top of each other with price being above the red line, okay? That is a bullish trend. And that's exactly what we've seen for a few months in SoFi. What we have right now, I would consider a sideways trend, because the 10 is under the 20-period EMA, right? The 10 is under the 20. Price is currently over the 50, and it bounced hard on that 50, right? That's potentially very bullish if it can bounce hard on the 50. But not all that long ago, it was 10 under the 20, price under the 50 for a long, long time. Now, I'm going to give you some perspective here. When the moving averages are crossed down, right? And if you're a long-term holder of this, I think you are best, let me take out the 200. I think you're best, in my opinion, you're best to wait it out, right? Let's say you're a long-term holder and you see it under these moving averages, right? Just hang out, just wait. And then once those moving averages cross back up, that is now the ideal time, because price is telling you that it's going up. There's no sense in buying a stock when price is telling you that it's going down, okay? From this point, let's just say right here, March 1st, 2024, when it was around 870, and it just went down and down and down, and then till July, and then it popped back up, and then came back down, right? Imagine you buy it on the day when it crosses back up, you sell it on the day it crosses back down. You're not out any money in this case, right? But if you bought it here, and then we didn't quite get that crossover back down, and then it goes back up, you're looking to get in around 743 and then just watch it go, right? Now, Granted, that doesn't mean it's going to go forever, and it definitely doesn't mean that it will do something like this, but it's so much easier to own a stock that's already moving up. That's the key takeaway I want to give you here. It's so much easier to own a stock that's already going up versus trying to say, I know it's going to go back up day after day after day when you're getting wrecked and wrecked and wrecked. So now I'm curious to hear what Kyle has to say. I'm sure he's inception. I'm sure it's going to be painfully bullish, is what I'm guessing. So let's see.
SoFi stock, just the chart is getting really, really tight. Not big sell-offs, just little pullbacks every single couple percent move. So I like the way that the stock's moving right now. It looks like it wants to break through that 1550 and get back into the $16 level.
When he's looking on the intraday chart, I don't give a lot of credence to intraday charts. I'm not a day trader. I don't think Kyle's a day trader either. So you really need to look at charts on your time frame, because from what I've seen, Kyle is a longer term investor in SoFi. And by all means, you do you, my friend. But looking on an intraday chart is very distracting, right? One of the market wizards, I forget who it was, said that having a quote machine on your desk, now this is before online charts, having a quote machine on your desk is akin to looking at a slot machine sitting on your desk, just like tempting you, right? So if you're a long-term holder or even a swing trader like me, like this, it doesn't help you at all to be looking at intraday charts.
Probably by the end of the week or next week. So that's the range I do believe the SoFi stock will be at, heading into the SoFi earnings around the $16, $17 level. And that's literally where we want to be at, guys. We were just about 7.
So earnings are coming January 27th, and he's saying $16, $17 level here. 16, let's say 1650. We'll split the difference. Right? He's saying this is his trajectory from here to here. So basically going up 8% leading into earnings. I'm not saying it can't be done, but this is a sideways trend at the moment. Sideways trend at the moment. Now, yeah, it did go up 3.5% yesterday, but the trend is not a single day. Okay.
$7.19. So anywhere in the $16, $17 range going into this Q4 earnings, getting the full year 2025 guidance. I feel very confident that SoFi is going to blow it out of the water, and we're finally going to break into the $20 level. Now look at this, guys, the exact same time frame.
So we hit earnings and then we go up to the $20 level. Right? I assume he means like immediately. So another 20% move from that point. So going up 8% leading into earnings throughout the end of the month, another 8%, and then another 20% on top of that. Aggressive.
15 minutes into the close, the IWM Russell 2000 is selling off. So SoFi is officially inversing the Russell 2000. It has been following the Russell.
So Kyle, that term is called relative strength. Whenever you have a stock that shows more movement to the upside than the index is showing, that's called relative strength. So SoFi has strong relative strength here.
2000 pretty closely for the past couple of weeks, but this is good news to see. Okay, we got a little bit of an upgrade today. We're going to cover that for you as well, but you guys can see we're inversing the small cap IWM right now. All right, guys, and here's the little upgrade we got today. It's still technically a hold. I'm telling you, these analysts on Wall Street are very, very shady. This is the Barclays analyst, Terry Ma, keeps hold rating on SoFi, but raises his price target from 9 to 16. So how is it still a hold when the SoFi stock isn't even at the $16 level? It's still
because it's not a sell and it's not a buy. That's how it's a hold, right? So you've got like strong hold, neutral, strong sell, etc. Hold means hold on to the shares you got, right? They're somewhat neutral on the stock. They're not saying they're aggressively bullish or bearish. That's what they're trying to say, Kyle.
Still trading in the 15s. How is that not a buy? This has to be something with how they do their ratings and how they get their star ratings and stuff like that, because this makes no sense to not give a buy rating. Maybe it's better to give a hold and then give.
Well, he's probably not like incredibly ultra painfully bullish like you are, right? So not everybody's going to have the same opinion about a stock, right? That's what makes a market, by the way. That's how the market works, is that you're going to have people who are looking to buy, you're going to have people looking to sell, then you're going to have people looking to hold what they've already got, right? That doesn't necessarily mean that they're expecting it to go up 30% in the next 3 weeks, my friend.
Give a buy rating right after earnings, and that helps out their analyst ranking. I'm not exactly sure, but this same analyst, after the Q3 earnings, literally after he saw the report, gave SoFi a $9 hold, and now he's increasing from 9 to 16 with no further earnings reports. Just literally what happened? Trump became president, and
No, because these people have to cover their asses. Okay, when it's gone from 9 to 16, he looks like an idiot. He looks on paper like he messed up. when he says my price target is $9 and now the price is $15.29, do you really think he's going to say, no, I'm right, the stock price has to go back down to 9? No, he's looking at it, he's like, well, I got to cover my backside here, so it's almost 16, let's just put it as 16, right? This is essentially just throwing darts at a dartboard and trying to see how close you can get to where the price is currently, right? The projections for next year on the S&P 500, all of them are within, a couple hundred points of each other, because none of them want to stand out and say, I think it's going to be great, or I think it's going to be awful. Because when they do make those projections and they're so far away from price that it makes them look bad. It's bad for their career to be the one guy with a $9 price target when price is now 50% higher than that. So yeah, he has to do that.
One rate cut or something like that. There's no reason at all to go from 9 to 16. So pretty shady in my opinion. I'm not really, feeling it too much. It's nice to see a little upgrade, but there's even more shady
It's shady because it's not $20. Is that what you're saying?
stuff that goes around with the $9 to $16 level, guys. Wait till you see this. Remember, we saw the KBW have about 12 media outlets pushing the sell rating, push out to 12 media outlets. Wait till you see what we got on Webull for the $16 upgrade or hold. All right, guys, this is literally the SoFi Webull updates, and we have one update coming from TipRanks. Price target raised to 16 from 9 at Barclays. That is literally it. So the KBW sell rating, you got about 12 announced in your face. And for this little 9 to 16 upgrade, you got 1. You can see how strange it is.
Okay. I see his point here. He's trying to say that the shorts are out there pushing a huge narrative that you need to sell SoFi, but only one outlet is saying you need to buy or at least hold SoFi, or the price target has gone up. It's just how the game is played, my friend.
It is behind the scenes with these price targets. I believe this is manipulated by some big people up top. Probably some of the people that are inside this company shorting it right now. Who cares? I still think we are going to, outpace these analyst price targets after this next upcoming earnings report. But let's get into the, technical analysis, see where the stock could potentially be headed. All right, guys, and we got micro to macro. This is Jesse Dow. Take a look at this. He said SoFi has a nice bull flag with a ton.
I bet you big bucks that he went through and scrolled and only is going to pick out the ones that are extremely bullish, right? Because I'm sure that there are plenty of people. It doesn't look like he's going to do his own technical analysis, which is a huge red flag to me. But it looks like he's only going to be sharing the ones that are bullish, because it matches his theory, right? It's confirmation bias that he's looking for here. Kyle, I'm not here to tell you need to look for confirmation bias. I'm here to tell you trade your own plan, right? When you trade your own plan, you don't need anybody else's opinion. So let's make this bigger.
Ton of wicks sitting underneath of it. The upcoming measured move should get us to a $21 range where we hit the next Fibonacci level.
Fibonacci's, in my opinion, are hocus pocus. Fibonacci's, I mean, it's wishful thinking, right? And it's also another thing for confirmation bias to say, oh, this Fibonacci level is going to come into place. No, all that matters is buyers and sellers, and buyers and sellers are represented by the price. And when the price is moving A to B, that is your moving average, right? Right. This is an average of price over time. That's all it is. Fibonacci is wishful thinking.
We're going to take a look right here. We'll zoom in a second. This is if the broader market supports it. So let's get a zoom in. And you can see this is the 618 Fibonacci right here, $21.12, guys. This is about 44% upside. So this is what he's seeing on the chart. A nice bull.
He's so excited to be bullish on this, but he doesn't even Kyle, do your own research, my friend. Put out your own technical analysis, right? I'm not making a projection on this. Absolutely not making a projection, because I don't need projections. Market wizards don't make projections. What we do is we look at what's going on and we say, okay, is the trend moving up, or is the trend moving down, or is the trend sideways? The trend is currently sideways. Okay. Will it hit this? I don't know. I don't need to know. And that's the thing whenever you advance from a novice trader to somebody who's been in the market for 15 years, right? I don't need to know what's going to happen to make money. Either it's going to continue on its trend or it's not. And if it doesn't, that's okay. I'll just get out. I don't think Kyle has that sort of risk first mentality. But if it does continue a trend, by God, hold it as long as you want.
Bull flag, guys. Remember, guys, we literally topped out right here at that $17.19. If we can break through the $17 level, it's literally clear skies till $21. Maybe that's where we're
okay. On that topic, I do agree with that. I do agree with that, and I don't think he knows how to articulate that. All-time highs are exceptionally bullish. Why are all-time highs exceptionally bullish? It's because there's nobody who's ever owned the stock who's losing money on it, right? So if you think, we can use SoFi. If the price moves from $15 to $20, and let's say that's a new all-time high, anybody who's ever bought it at $19.99 and below is now up on money, is now profitable. I'm not saying that, they couldn't get in and out and lose money over time, but if you've ever bought it anywhere between 0 and $19.99, you're now profitable, which gets people excited, right? When people are excited, that's going to throw more momentum in the direction of that, right? Think of behavioral analytics, right? When people are happy, they want to buy more things, right? When people are frustrated, when they're sad, they want to not buy as many things, right? They want to sell things. And in this case, hitting a new all-time high is very bullish. So we'll see if that happens.
We're headed after the SoFi earnings. I'm not exactly sure, but I'll take, breaking into the $20 levels inside of January. Okay, that would be absolutely insane. It looks like SoFi has timed this earnings report to perfection, guys. We got the TGL Golf League coming in one day. We're going to see how that does for marketing. I don't really have an opinion on it yet. I got to see it to see if, the vibe really works. NFL playoffs, we got the Chargers 5 days out. That's just their main stadium home team. They're not getting a home field for this game, but it's just a type of market that they're always marketing to, with their commercials. NFL playoffs, Rams is a home game. This could be big for SoFi, especially if the Rams win. That'll be absolutely awesome. We got President Trump coming in.
Bro, come on. Do you actually look at the ads on an NFL stadium and you're like, yep, I need to go. Like I say, I don't know exactly what SoFi does. So enlighten me in the comments. I would love to hear that. I need to go be a customer of SoFi, or I need to go buy the SoFi stock. No, come on, Kyle. You know that that's not a real thing. When's the last time you went to AT&T Stadium where the Cowboys play and you're like, oh my gosh, I have to buy AT&T stock and I have to switch my service provider from Verizon to AT&T right now? But dude, people don't do that. Okay, don't try and bake that into your stock price thesis, because that's not real.
And in 14 days, that could be bullish, because we saw what happened when he did win the election. The market was mooning for like 48 hours straight, and then the Q4 earnings 21 days out, and then the Fed meeting 24 days out. So guys, this is all in January. So this is an extremely big January, and I can't wait to see all this. It's going to literally fly by in a matter of no time at all. So just, hold on, DCA when there's opportunities. I don't think there's any reason to sell right here. Just take a look at the, overall growth of SoFi compared to other companies with under 4 billion in revenue. I said there is levels to this growth. Okay, you can see right here, Q2 to Q3 revenue growth. SoFi is literally coming in at the top as of the last quarter, guys. 92 million growth, Shift4 82 million, Snowflake 74, Palantir 47 million. I mean, SoFi once again doubled Palantir in quarter-over-quarter revenue last quarter, Q3. Absolutely insane. Affirm 39 million, CrowdStrike 37, Upstart 33, Cloudflare 29, Lending Club 24, Robinhood negative 45 million, Rocket Lab negative 2 million. So guys, SoFi is literally at the top for companies and its revenue metrics right now.
And where my head is at is, if you are a trader, if you are an investor, only price pays. Fundamentals don't mean anything. And I know that that's hard to hear, but fundamentals don't mean anything. Only price pays. At the end of the day, if price is not going up, you're not making money on your stock. And if you're not making money on your stock, you're either losing money or it's dead money, it's going sideways. And of course, let me change my screens back real quick. Of course, the last few months have been extremely bullish, right? Extremely bullish from September to now. But how many months did it go down? Right? It went down from August of 23 to July. No. August of 23 to August of 24 went down. And then I didn't even realize this. Good gravy. I didn't even see this before. February of 21, all the way down. It peaked back up in May, all the way down. Went up to November to $24, November 2021, and then it sold off from November 2021, hit a high to the low for 18 months, right? Would you be that bullish on it if it were 18 months? Of course not. Why would you be? Now we're on the other side of this, and we did have this pop right here, but I'm not saying that a pop like this can continue forever. And I certainly would not get behind, hey, $45 the next 18 months, tripling the next 18 months. $75 here once it hits the S&P 500. I think that having these sort of pipe dreams are exactly what they are. It's a pipe dream. But you know what? I could be completely wrong. And that's what separates the best from the rest, is if I'm wrong, I'm going to get out. If I'm wrong, I'm okay with that. I'll take a couple % loss and move on. And like I described earlier on in the video, if the price is moving up, if the price has come down, hit a bottom, and starts going up, it tells you on the chart with the moving averages. And if you just follow those moving averages, watch what they're doing, it makes trading a lot easier. So hey, go ahead and subscribe if you haven't already. And let's rank this video. Yesterday, I rated Kyle's video as a 2 because it was just painful, right? It was absolutely painful to watch him come up with justifications and excuses as to why SoFi is going to triple in value in the next 60 days. This one, I'm going to throw it at number 4. I'll throw it at number 4. Mediocre. Now, what would make this video better is Kyle just being open to maybe taking on a new investment, okay? As well as be open to the possibility that could go down and keep your risk in check. Keep your risk first, because trading risk first is what is going to save your backside if it does go down. And if it does go down, that's okay. Be okay with it going down. Just go down without you, right? Get on out. Take your profits while you can and move out of the way. So tell me what you're trading in the chat. And of course, like I said, let me know what I got wrong on this, because I'd love to hear your opinions. And come back tomorrow to save time, make money, and start winning with less risk together as a team here in the Outlier Trading Room. We'll talk soon.